Trend trading update yet again towards the weekend. Let's have a look at the markets here. We are almost approaching the end of the year 2016. And what has happened again this week? What we see here is the S&P 500 chart. This week not as bullish as the last week, where we had really quite the move through the black line, which is our last resistance, now support area. And what that means is we want to go up. This week retraces a little bit, but we are still at the highs of last week here, and there is not too much of a concern. Also, momentum is going up. We are just holding this as a trend follower. You don't know if the trend will develop. If it comes back down again, remember that divergence we were talking about on the monthly chart. We still have it right there. Even though prices are higher, momentum is not going up. And in here, what you get is prices are now going higher. We are at the 16th of December. We still have 2 weeks left in this month. Let's see where it closes. If we get a strong close, and if continuous weeks are going to close strongly, this divergence may cancel itself out as momentum keeps going higher in a new bull market. But we don't know yet. It will take quite a lot of time probably, and this starting of the possible trend here with the break of this resistance could be a sign of a new bull market, but we don't know. We just have to wait. We have our stops in place, we have our risk management in place, and that's just the most important part. If we take a look at another index here, the Dow Jones is pretty much showing us the same picture, even though it is quite a lot stronger than the S&P and quite a lot stronger than all of the other indices worldwide. Now this black line we can remove. This was a failed breakdown here at the monthly chart. You would have seen we are right around the balance zone, and this just doesn't take prices too much lower in many cases, especially in the indices, as they seem to just want to go up. Breakouts to the upside taken is usually quite successful compared to the downside breakouts, where nothing works unless you have a crash, which you don't really have that much often. So you always want to buy as it makes new highs. That's what it did here, and we are up quite strongly. The week closes in the green area. We're just holding this. Momentum is almost there at a new high. On the monthly we have the same kind of divergence as we do in the S&P, but who knows where this market is going. This up move was quite long, but also quite flat. Let's see where we are headed right now. We're just buying, we're just going with the price. We will never know where it's headed. We have everything in place, just like I said, stops, risk management as well. Let's take a look at the FTSE here as a representative of the indices in Europe. The DAX and Eurostox broke out to the upside. We don't have anything happening like that in the FTSE yet. Still, we have our supply up here as it's marked on the chart, and we did see that retracement back into the balance zone. But worldwide strength in the stock indices really suggests that the FTSE will probably follow and may make a new high, which would mean we are breaking quite the area here. If you take a look at that supply, as small as it may be, this is the 4th time right now we are rejecting that area. Now we are hitting it again. Maybe we are moving through. Maybe that's the time this market is breaking out to the upside in a new bull market in the world indices and also in the FTSE. I have no clue. I'm just trading the price and I'm adjusting my risk, and that's pretty much all you gotta say about that. Let's take a look at forex markets right now. We have a British pound that's of interest, British pound US dollar continuing down. We are approaching, or we had been approaching, the balance zone, which is the place where the market wants to be if there's no news coming in. And we are rejecting this area from the downside, now moving down further probably. Who knows how long it takes, who knows how far it goes. No idea. We are following the fractals, which is the place where the market changes its mind, goes the other way, creates another fractal, and if it keeps making fractals that have lower highs, then you're in a downtrend. If it keeps making fractals that have higher lows, you're in an uptrend, and if these fractals occur inside the balance zone, that's pretty much the place where your most important decision changes will be. And of course, that's really simple terms for what really happens. If you look at the weekly chart, if you look at the daily chart, if that's what you're trading, what these fractals really mean is that in or on the internal time frames, 4-hour, 1-hour charts, half-an-hour charts, you have major corrections being finished, and the market is picking up its overall trend direction. And that's of course the market direction that you will find on the monthly and on the weekly charts. As a trend follower, your interest is to stay in the market as long as these directions will be picked up again and again and again. And this will be indicated by the momentum, this will be indicated by the open kind of behavior of the balance zone of these moving averages that are open. They are not intertwining like here or like here. They will be open and moving to the downside, or in an uptrend they will be moving to the upside. And you will have prices continue down. Your stops are always above the fractals in the balance zone or in these moving averages. That would mean that for the British pound, US dollar here, we're definitely staying short and waiting for what happens. British pound Australian has been a little bit unthankful here due to the extreme weakness in the Australian dollar, which we'll look at in a second. We are trading inside the balance zone. This week is stronger, didn't make a new high compared to the last week. We'll see where this fractal will be created before this goes down. I still very much believe that we'll see new lows in here, especially when you look at the overall time frame. We are heavily down. This actually needs a correction here, and we'll hit these lows here in the 145 area. But that will take quite another while. Let's just take this into 2017, like so much of the other stuff that we have going on. Especially interesting and very exciting this week is the New Zealand and Australian dollar combination. When you take a look at the weekly chart of the New Zealand dollar, you can see how we've broken out. We are closing below the breakout. This is very nice looking actually. This doesn't mean anything if it's nice looking or not nice looking, but I'm just saying that it's performing just like the textbook would suggest. The overall time frame, as I have been mentioning in the past couple of weeks, shows us a downtrend, a correction into the balance zone, the place where the price wants to be, and now it fails, and here it gives you this pin bar at the upper side of the balance zone where it hits supply, and now it continues down, it breaks a fractal on the weekly, and all we do is we follow this trend to the downside, and as it keeps on moving, we'll add on positions to this. Australian US dollar is the same kind of deal. You get your breakouts, you had your previous resistance price is never able to close above it. Now we are moving down. I'm expecting new lows here. The monthly chart is similar, not the same, but similar to the New Zealand dollar. We had previously been seeing a downtrend correction and probably continuation. Who knows if it will end in here, or if it goes down, approaches these huge candles with all of those wicks down here. We'll just follow that market, however long it wants to trade down. Very much of interest this week as well as the euro dollar. As we had been talking about this all year after this 1.5 year correction, we are breaking out to the downside. It's pretty beautiful as well. We do see a market that is not really rejecting lower prices. We did have a little bit of a pullback, or we are having a pullback, as this is still real time here on Friday night in Europe. In the euro dollar, but we are closing, or it seems like we've been closing below the absolute low 1.5 years ago, and that would just indicate for me that this market is going to continue down. If it were just, the last leg of some sort of move where you see a turnaround, a reversal to the upside, then you would probably not see a close like this. I mean, we still have to wait until the new year. I mean, we're entering the Christmas period, the New Year's period here. It's probably going to be pretty slow for the next 4 weeks or something like that. But still, we are breaking lower, we are only paying attention to price action. We don't want to be too aggressive here with add-on positions in this short, but we have to recognize the overall kind of development here in the euro, which definitely is lower. You have your previous trend down, and that's the monthly chart, by the way, and your correction, and now we are continuing this. We are breaking out to the downside. This has not even been a harsh kind of reversal to the upside. It's just going down more after it has been breathing for quite a while, following this massive move to the downside. So don't underestimate this. I mean, we'll still have to wait and see if the follow through to the downside will be there. But if this moves down, it could be coming as low as these marked areas here in the 185, 187 kind of area. We didn't mention gold for a while. Last week at least we left it out. When we take a look at the weekly, we really kind of have to admit here that the previous, or the analysis that we've been doing here, has not been unfolding too well actually. The only market that isn't performing to what we are thinking. However, that does not mean that anything is wrong. We're just, as I always say, following the price, and when price proves that the movement that is expected doesn't follow, then we'll just have to adapt what we think and have to adapt how we trade the market. Now, when this move, this kind of impulsive move from the downside that this market had been trading below, moved to the upside of the balance zone, we were expecting a move to the upside after this fractal had been created. Kind of a bounce off of the balance zone here. We have marked the demand zone, but this demand zone has not been paid attention to. In fact, on the overall time frame, which is the monthly in our case, we are now quite clearly below the balance zone. Last month closed below it. This month is also trading lower. A weekly view will show us what the market is really doing internally. Like when you go from the monthly to the weekly, what you're really looking at is kind of a holistic approach to the market. You're looking at the insides of it, and what you see is a clear breakdown. You even had your fractal right there, which was broken to the downside. However, this is not the best fractal, since on the overall time frame at that point when this was hit, you were still inside or just above the balance zone, the moving averages. And this is quite a strong support level, where we thought that after the initial move on the monthly, when you had your fractal created, the market would turn around at that kind of level. But it didn't. It follows through to the downside, as you can see here. We have no idea how far down this is going to go. It may very well approach these lows now. We don't have any position in this, since overall it's a correction. We have no idea where the market is going. We were expecting an up move. It didn't happen. We didn't take this fractal because market was just approaching support, and that just means we are out of this and we are waiting for new developments. We have no idea if a real trend will unfold, even though this is quite down a lot. We'll really have to wait for gold and see what happens. Maybe it hits that new low, just goes below it, then turns around. Maybe it falls out, and we have no idea where it's going to end up. That just shows again that you just want to trade what you know and do what you know. And it's kind of like you are never going to be 100% right. You want to trade what makes sense, what you've learned, and kind of improve in the niche that you're trading in. For me, and for maybe for you as well, that's trend following, and we want to just trade the markets where we see the trend following entry. We want to hold on to the position, we want to show patience, and if something doesn't work out, like in gold right now, our disappointment really shouldn't be dominating our emotions or our feelings or our attitude towards the market. We have quite a lot of other trades where everything is working out, where we are pretty happy to go into the new year, even though we are still kind of shaky in the indices. We don't know what the Nikkei, the S&P, the DAX are going to be doing. We don't know what the Euro is going to be doing. We really don't know what British Pound Australian will be doing. We're trading up this week. But the overall development and the positions that we're taking in those trends, they are still fine. We didn't break any levels where we have to get anxious or where we have to stop out. And that's very important. We have a system. The system says only stop out or go out when the trend really is over. It hasn't even happened in any of the markets that we're trading. The British Pound Australian is actually the market that had or has unfolded the most, and in all the others we're just holding on to the position. We don't do anything. That's the most important part in trading. Know your system, know what you're doing, and then realize that time is on your side. You don't have any stress, you don't have to force it, you just trade whatever the market offers. If this is too long term on the weekly, you go to the daily. You can even do this on the 4 hour. Just make sure you're able to act as the system tells you to change stops, to enter positions, to stop out, or whatever. Thanks again for watching this week, and see you soon again before 2016 will be over, and then we'll head into the new year.